Ladies and gentlemen, welcome back. Today, we're going to take a deep dive into the magical world that is Disney to see if their stock is truly a wonderland to place your cash during this mayhem, What we're going to do is we're actually going to start something off with a little bit of a sad news, because it was just released that Disney did just cut or suspend its dividends. So I mean, I hate to start it off like that, but it just is what it is, because it's such a big headline right now, because Disney's been paying dividends for so many years, it's almost ridiculous. But either which way, if there's one thing that you guys can take away from this channel, it's that long-term investing is the key to success. And since we're long-term investors, this isn't really anything that we're gonna sweat, simply because this is a temporary short-term problem. And once Disney stabilizes and the economy stabilizes, however many years down the road that may be, then eventually Disney will start their dividends back up, increase their dividends, and so forth. So this is only short term, and it's nothing to worry about. So let's not get discouraged with this news. Let's not let this keep us away from what could possibly be a really good stock. We don't know. So don't let the headlines fool you guys. We're actually true investors here. So let's take a deep dive into Disney and let's see what they got. So without further ado, let's jump straight into this. And if you guys could, please drop a like, hit that subscribe button. It means the world. I'm trying to grow this channel into a big community in which we can all share, bounce ideas off of one another, and just see where we can take this thing. So anything helps. I appreciate the support, guys. So without further ado, let's get right into it, Okay, so the first thing that I think we should really take a look at, just about in any company that we don't really know about. Obviously we know what Disney is, but let's just pretend for a minute that we don't. You all know what they are comprised of, and Disney is basically a straight up conglomerate. I mean, they've been around forever, and what you guys are seeing right here is pretty much everything that Disney owns. They own Walt Disney Animation Studios, Marvel, Disney Channel, Disney Store, Aladdin. I mean, everything and anything, I mean, that your childhood memory can consist of. They also go into sports, which is some of my favorites. ESPN, everybody loves that stuff. Lucasfilms, Star Wars, all that new Star Wars stuff, that's all Disney. That's all Disney. So they own a lot of things, and they have a lot of different revenue sources. So their primary revenue sources are broken up into products and then services. So they also have their amusement parks that everyone knows about, which are just straight up some of the most craziest places you can ever possibly imagine. So anyways, the next thing that we're going to take a look at is a list of very important acquisitions that everyone should know about. You want to know what were the most recent acquisitions? Where's the money going? I mean, these companies that are huge conglomerates are always trying to buy other companies all the time. Products, anything that can generate more and more money, that's what they're looking for. So here what we can see is in 2019, their first one was 21st Century Fox, and this was a huge boost in the direction that they were trying to go to with their Disney Plus platform. This is their acquisition that was basically to help them complete the launch and everything and move forward with all of that. So this was a huge $71.3 billion acquisition made in 2019. So I mean, basically every acquisition that they've made from here on now is all in preparation for the Disney Plus, all in preparation to move forward and try and take over Netflix, even though a lot of this stuff goes way before Netflix. But Disney's just been in the game for so damn long. I mean, they own, and they have tried to own, just about everything they can possibly own. So I mean, just about anything they could buy, they could, especially the last two. have been primarily to focus on the platform for Disney Plus. Everything after that is just to get naming rights and all these other kind of rights for movies and ideas and concepts and everything. So they have spent tremendous amounts of money, billions of dollars, more than any of us can even possibly make in our entire life, just on movies and ideas and concepts and all of these things that they can add to their amusement parks and their theme parks and everything. So Disney knows how to play the game, and they play it right. The next thing I think we should take a look at, which we're going to switch over to, is who are their competitors. We want to know who's trying to come after our territory, who's trying to come after our market space if we try and invest in Disney. So who is it? Let's take a look. What we got here, it's actually pretty funny. If you take a look at this particular website and actually the very first Google, it even says their primary competitor is the Walt Disney Company. But anyways, let's look past that. Their main competitors are going to be the obvious people that are in the television media space. It's got CBS, Sony, Viacom, Warner Media, Comcast, etc. You know, you can even throw in, and you have to throw in Netflix, Hulu, Amazon, all the streaming platforms. I mean, to be perfectly honest with you, you want to really place Netflix and Hulu and Amazon above all of, you know, CBS and Sony. Those are just small chump players at this point in the game. But the big streaming platforms are the big competitors right now. Disney has spent so much money in Disney Plus, it has to pay off. So those are the big dogs that they're going after. Actually, Disney is trying to go after the market space that Netflix has created. So that's who you guys really should be taking a look at. However, what we're going to flip over to is their financials. Okay, we want to know how strong are they, especially during these times when we know their amusement parks are shut down completely, and we want to know how their product lines are going. How is Disney Plus going, etc. Where's the revenue going? So we're gonna hop into that right now, and yeah, let's do it. All right, so this is their most recent 10K report. And as you guys know, we always really like to go after the 10K reports because that shows their full year growth. That's what we want to compare their numbers to. If you want to go in their 10Q, you can. 10Qs are very good to stay up to date for. However, when we're long-term investing, I mean, you're going to read 10Qs until your eyes bleed, but, you know, eventually you're just going to start reading the 10Ks, and then that's going to be enough information for you to absorb, because you should already know what your company consists of, comprises of, etc., when you invest into it. So reading 10Qs is just pretty much just for the avid investors that just really love doing it. So what we're going to hop into is their revenue. Okay, we really want to see their two services. They got services and products. How are those going? Obviously. And we can see that services is their big dog. Okay, that's bringing in $60.5 billion. Okay, so that's a lot of money. And from 2018, $59.4 billion, that's a 17% increase. So we are seeing in the services a very, very good steady increase of 17%, okay? The income after that, so that's going to really help us when it comes to finding out, okay, so you brought in all this money, but you have all these expenses. You have all these bills that have to be paid. You have all these people that have to be paid. How much did you actually come away with at the end of the day, okay? And their net income for 2019 was actually down 16.5%. That's not good, okay? And that's actually a big reason why they missed their numbers, which is a huge headliner right now, okay? So they hit $10.9 billion, which is, oh my God, that's insane money. But last year in 2018, they had $13 billion. So that money went somewhere. And to be perfectly honest, the biggest increase really is the cost of services and the sales. So if we go over here, the cost of services, you can see the increase that just happened from 2018 to 2019 was huge. But if you take a look from 2017 to 2018, that's not that much of an increase. Only $2 billion of an increase. You compare that to this, we're looking at 9 billion just about, and that's huge, okay? So those are going to be what's accruing a lot of where the income that we lost, okay? And that's why they took a huge hit on their numbers. The next thing we're going to swap over to, we're going to flip down, flip down, flip down, flip down. We're going to take a look at the assets, okay? All right, so looking at the assets, what we are able to actually look at is a pretty huge increase. However, we're going to take a look at the increase because the increase comes from one very specific area in their financial services. But what their assets are is $193.9 billion in 2019. I mean, that is incredible, okay? And to compare that, the 2019 number is $98.5 billion. Yeah, that's a 97% increase, ladies and gentlemen. That's fat, okay? But a lot of that, okay, a lot of that comes from their goodwill. And their goodwill, well, that can be comprised of many, many different things, but that's an intangible asset. So that's not really something that they can really touch a whole lot. And that's not really something that's just going to be a continuous factor in their 10K going into 2020, 2021, 2022. This isn't something that we can rely on to give us huge increased numbers. This is an anomaly, okay? So take it for what it is. It's a big bump, yes, but it's an anomaly at that, okay? But if we take a look at their liabilities, you'll see that their liabilities, I mean, their liabilities is only sitting at $31.3 billion, all right? And in 2019, they had $17.8 billion. So we did have quite a big increase in their liabilities. They took on a lot of debt. I mean, they had to. They have other long-term debt of $13.7 billion, okay? So, I mean, purchasing all these acquisitions and everything, it's got to come from somewhere. And a lot of it, almost all of it entirely, comes from debt. Their cash and their cash equivalents that they're sitting on is $5.4 billion. So they do have a lot of money in the bank. However, they don't have a whole lot of money in the bank. And when services and everything start shutting down and their amusement parks are shutting down, I mean, those bills and everything else that it costs to make movies, etc., those keep accruing, and those have to come from somewhere, which means they're probably going to have to leverage debt, etc. And so this financial situation, this economic situation that we're in is not a good one. Is not a good one for Disney. And that's a big, 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 big reason why they just completely shut down their dividends as for right now, okay? So they are taking a pretty big short-term hit. We're going to switch over here into Robinhood so we can take a look at their technical chart real fast. All right, so over here, what we could take a look at is right now it's sitting at just about a buck, $100.70 even, okay? It had a high of about 160. We could show more. A high of $153.41. Okay, so this does actually have quite a bit of room to grow. Plus, we both know that their streaming service of Disney Plus just started taking off, and I mean their lineup is huge. I mean, they got their whole entire Marvel lineup, and everyone's going gangbusters on that stuff right now. So everyone's kind of hopping over to Disney Plus. They're going to start generating a lot of revenue off of that, which is going to start showing on their bottom line and their financials. Eventually, once the economy settles down, their amusement park goes, and they have full steam running, I think this company is going to actually start being a lot more profitable. And I believe that they're going to bust through the $153 barrier. And I do believe that this company does have potential to hit that $200 mark. And their market cap is going to actually start going up. I do really believe that their market cap is going to hit that $200 billion mark. And so this company has room to grow. Just because the headlines are saying that the dividends are being shut down, dividend cuts, all this, etc., prices, stock price drop, you can't let things like that scare you. You have to take a look at the financials, and we know that they do have a lot of cash. They are debt heavy. However, they have a lot of assets, and they have a lot of generating revenue. this is going to be a company that they have taken on debt in the past. They have managed their debt. They're no strangers to the financial game. Trust me, Disney's been along for a very, very long time, so they're not going anywhere. So I'm not worried about the debt they're taking on. However, what I'm worried about is the $100 mark right here and right now a good price for Disney? And I still believe that right now the market does have some room to drop. I think that the market's very much due for a drawback. I mean, the feds can only suspend this thing for so long. It's ridiculous. But once the stock starts coming down and we start seeing some numbers, probably down into the low 90s and the high 80s, I'm probably going to start buying into Disney quite significantly, because I know that eventually in the long term I'm going to recoup a lot of those gains. So I'm probably going to wait on this stock for right now. I think it's a really good stock that you guys should take a look at, because it's not a bad stock to at least start building a position in. I mean, if you start building a position at a $100 and it starts dropping down, we're long-term investors, so that's okay. You're not going to get discouraged. You're going to continue to purchase in that stock. You're going to continue to average down, and then eventually you're going to have a really nice position. Let's just say, 20 shares, 30 shares, 40 shares, however many shares you're comfortable with. And then when the economy recovers and Disney starts recouping, you're going to start seeing your average share price. You're going to start seeing those gains go up and up and up. And that position and those dividends are eventually going to come back, and you're going to be able to reinvest those dividends into either that company, hopefully, or another company. So really, the choice is yours. Disney is a phenomenal company. Their balance sheet is it's good. It is good. It's not one of the best, but it is good. It's a solid balance sheet. So feel free to take a look at it. Please always do your own research. Don't hurt me. Don't hurt yourself. I preach it all the time. Do your own research. Don't let me sway you anyway. I'm a nobody, okay? I'm just out here trying to get all this off my chest and hopefully reach a few people and help you guys. So until next time, stay strong and, invest on them.